Hi guys, it's Mark Shawzin, the pattern trader here. In this video, I'm going to share the 5 phases of the market that are very important to understand if you are going to be a successful trader over the long term. Make sure you see phase number 4. It was responsible for most of the pips I have gained.
And within about a week, I could see this is something I can put a little bit of real money into. And when you're following a system, you should follow it.
And from $300 to $1,105 in 7 months.
Correct.
So I started with 2,500, and I've had 128% growth. You've got to give it everything. He's got the track record. They can just go on the website and see his history.
His way of trading is brilliant. He uses chart patterns.
Regardless of what people say, the most important skill that you can have as a trader is to be able to define the phase or the condition of the market. At any given time, my trading terminal has about 30 different instruments that I'm screening. When I go through my charts at the end of each trading day to determine whether or not I have a trading opportunity, I look at the phase to determine whether or not it represents a suitable risk-reward criteria. Typically, you've been told there are only 3 phases of the markets. The markets can either be going up, going down, or going sideways. But what most traders don't understand is there are 2 other key trading conditions. They are when the market has been trading down and then all of a sudden, out of the blue, it just reverses and goes the other way. These reversal market conditions are where I consider I have a tremendous strategic edge, being able to detect a turn or change in the market very, very early. I don't define myself as a swing trader, a reversal trader, or a trend trader. I don't like to put any kind of limitation as to what kind of trader I am. At the end of the day, I'm always looking to surrender to the will of the market. But in the end, a lot of money is made on the big market turns, where the market just reverses from one direction to the other. Although it catches a lot of participants by surprise, if you look closely, the market has a way of indicating or actually pointing when it was about to make a turn. This strategy to determine the phase or direction of the market is fairly simple. I ask myself, where's the market going? Is it going up? Is it going down? Or is it going sideways? Or turning from bullish to bearish? Or bearish to bullish? If you can identify these market swings before they happen, then you'll always have a distinct advantage over all other traders and make a lot of money. Throughout my 36-year trading career, I built my reputation on identifying these price chart precedents and taking advantage of them before they happen. Let me show you the 5 historical precedents that you can use to spot a reversal. A lot of traders refer to these patterns because they occur over and over again. And this is nothing new. There are billions of books written on the subject. However, most traders are using these price charts and price patterns wrong. In and of themselves, these patterns don't mean much unless you have an insurance bar. But more on that in just a bit. First, let's take a look at the 5 primary historical patterns that I use in my analysis. This pattern is very simple. Price makes 2 highs, then breaks the neckline down. Or the opposite happens. In my British pound versus Australian dollar trade, I identified a double bottom in my email. Check it out. Pretty cool once you see it on a real chart, isn't it? This is another classic pattern. The fact that the head is higher means that price tried to explode upwards but failed. This says something, especially since the last peak fails to reach the same height. Usually it means that price is heading lower. An inverted head and shoulders means prices will head higher once the pattern is completed. Here's an example of a trade I took with a head and shoulders price pattern. This is one of my favorite patterns. When price breaks out of this pattern, it usually makes a huge move. However, it is an inherently unstable pattern, and you must manage your risk carefully and pick your trades with care. Here's an example of when I identified one recently. Now, sometimes you'll see price spike down before moving to new highs. That is exactly what happened here. Let's move on to the next one. This is pretty much a broader definition of a double top or a double bottom. I love this trade. I recently took a long position on gold based on this pattern. I remember this trade so clearly. It shot up more than 400 pips after I put the trade on. Have a look at what gold has done since then. Are you starting to see a pattern here? Price consolidates for an undetermined time, but it always jumps out eventually. It's all about keeping your risk low until you catch one of these big winners. The fifth pattern I look at are price channels. They're pretty easy to spot, but they don't usually hand out huge winners. Instead, they give you about 2-to-1 risk reward, which is still awesome. Here's an example of a channel I recently used to determine whether or not to enter a trade. Let's do a quick recap. First, I identify the phase of the market, and within the phase, I identify a historical precedent, also known as a chart pattern. With me so far? Good. It is important to understand that you cannot use these price patterns in a vacuum. You need to confirm them with what I have coined an insurance day bar. First, there are two currencies I'm seeing right now that are about to crash. I've been encouraging our premium members to take advantage of this forthcoming swing, as all indications are pointing at an imminent shift in direction. If you'd like to see what these two currencies are and why I'm so confident on the impending crash, then I've recorded a detailed explanation video that reveals everything. If you'd like to watch this free video, then simply click this video or click the link in the description below. In that video, there's also a detailed explanation about the insurance bar that'll trigger the reversal. But this is a time-critical prediction, so I encourage you to take a look right now before this happens. The links are below. I'll see you on that video. Thanks for watching.